Hi, everyone, and welcome to Financial Foundations. We're in the month of June, and we're talking about investments. Nancy Nouse is joining me today. Say hi, Nancy.
Hi, Nancy. Hi, Shannon.
She is the owner and CEO of Benchmark. She's a financial advisor and a CFP, and her shirt is very nice today. She's got little hummingbirds on it.
Go Hummers.
Today, what are we talking about? What are our questions?
We're talking about investments, and we have two questions. First is, what question should I ask before making an investment? And there's a ton of answers to this. We're going to be bantering a little bit because that's how we roll. I'll start with knowing the difference between saving and investing. When you're saving, it is for an emergency. It's for something in the next, I don't know, Shannon, what, 12
to 24
months. And because you want something that's steady, you're not looking for a return, you're looking for security because you know you're going to need it and it's coming up very rapidly. With investments, it's longer term. So it's things that you know that you need to invest for 3 years, 5 years, retirement years. And that's one of the big differences, to know the difference between savings and investment. Anything to add to that?
Well, making sure that you have the ground laid. Are you debt free? Do you have enough money in savings before you start investing? Because it not only isn't important to know the distinction, but it's important to have that there before you launch out into markets that can be a little volatile. And we'll talk about that later.
Yeah, and we're reflecting back on the baby steps, and we just feel like they need to be done in order. We've both walked through them in order, and we feel very strongly about that. And more about that in another video, I'm sure. When you talk about what is investing, the first part of that is you are committing a certain amount of capital, again, for the long term. And you need to know what you're investing for. That's one of our favorite questions to ask when folks that want to be clients come in. We say, tell me what you're investing for. And I'd say 15% of the time people don't know.
Yeah.
So it's really important to know what the goal is. What are some of the goals that people invest for?
Well, the common one is retirement, but that can seem ambiguous for a lot of people, especially if you're more than 5 or 10 years away. Other ones that we see are your next car. We really encourage you to try and save up and pay cash for a car, but you can use investments to help you do that if it's more than a couple years away. Yeah. What about you?
Yeah, that, and also college, or whatever the next step is for your children. We just met with a client yesterday who wants to make sure that her daughter has a college fund, but also a wedding fund and also a car fund. Those can all be somewhat combined, but it's important to think about what the goal is before you start working on it. So a little headway there. How will I know when I'm ready to start investing? I think Shannon already nailed that. Part of it is knowing that you've walked through the baby steps, that you have adequate money in an emergency fund. Part of it also is what your company offers. So if you're working the baby steps, but your company offers a 4% match, say on a 401k, then you might want to take advantage of that as soon as you can.
Right.
So I think it's a matter of where are you on the baby steps and are you ready financially?
And I think finally, too, is what is it going to cost you? When you meet with an advisor, whether it's us or somebody else, you need to be asking them what fees or charges come along with it, because they're there and sometimes they're more transparent than other times, but you deserve to know.
Yep. It's your money. And if someone's not willing to tell you what they're charging, or if they say there's no charge, my spidey sense
red flag
is up. Let's talk a little bit about why should you invest? Why do some people choose to invest? And I think part of it is because you want a point of financial independence. We talk a lot about the difference between retirement and financial independence. Retirement means I'm just going to pile up a bunch of money and I'm not sure what I'm going to do. And financial independence means I really love what I do and I think I want to keep working. I just want to make sure that I'm working because I want to, not necessarily because I have to. What else do you think?
I think we covered a lot of it, as far as what should you ask before making an investment. You're asking where you need to be positioned. What is it for? Are there fees involved, both on the front end and on the back end? Be sure to ask about any kind of surrender penalties if that might apply. And to ask and figure out why am I doing this and what's my time horizon?
So Shannon, when we think about savings, we usually think about FDIC insured, whether it's a bank or an online bank. What about the stock market? How does it work, and why does anybody need to know anything about it?
Yeah, well, your money, your bank, your reserved, your amassed savings should stay in the bank. But if you want your money to grow and keep up with the other goals that you have, it needs to be invested in the stock market. And it's basically a place where companies go to sell little pieces of themselves.
Hmm.
They do this to raise capital. They want to grow, they have projects that they want to venture out on. Once their shares, they call the pieces of themselves that they sell are called shares. Once those are out in the market, then the stock market is really between people like you and
Hmm.
me who are buying and selling these shares of ownership back and forth amongst one another. So, in your portfolio of investments, it's important to use stocks or baskets of stocks. We'll talk about that later in order to let your money grow for you. There are a few different terms out there to categorize what the stock market looks like because it is incredibly broad. There are so many different companies within it. And if you're reading the newspaper or watching the news and you hear them say the markets are up or the markets are down, they're probably referring to one or two different indices that encompass several stocks within the stock market. And a stock market index is basically a thermometer. It's a way to gauge how are these buying and selling transactions going between you and me. Are prices up? Are prices down? And the three common ones are the Dow Jones Industrial Average Index, the Nasdaq, and the S&P 500. The S&P 500 is probably the most general blanket that covers about 80% of large US companies and what's traded on a day-to-day basis in the market.
Yeah, and just to highlight, all three of those are domestic. They're not international, nothing to do with that, so it's all American. And what Shannon just mentioned, not only does it is it an indication of what's going on with people that are trading shares, but also what's going on with those domestic companies. How healthy are they? How are things looking? How are they hiring? How much cash do they have? How much growth do they have, et cetera. So it also plays into that as well.
Well, I think that covers it for this week.
Great.
Thank you guys so much for listening. And if you have other questions, let us know.